Welcome back to the next episode of Debits and Credits with Haas and Dawe. And today we're going to talk about FinCEN. FinCEN, which is a abbreviation for the Financial Criminal Enforcement Network. It's within the United States Department of Treasury. It's overseen by members of Treasury, Department of Justice, and the Secret Service. And the main part of FinCEN that's hitting the escrow world, settlement agents across the country, has to do with money laundering because they now feel that people who are trying to launder money, whether it be from drug activity or other type of illegal activities within the country, are doing it through real estate, where they buy a piece of real estate and then they'll use they'll illegally gained funds and then they'll buy another piece of real estate and then they'll sell that and buy another piece of real estate and then it washes the money through the system so that they're not able to track what's going on with that. So what had happened a couple of years ago, there was something called a geographical targeting order, known to the ethical world as GTOs. And they picked on two counties to start with. One of them was Dade County in Miami, Florida, and one of them was in Manhattan, where they felt there was a lot of activity going. They expanded to a total of 8 counties across the country. And then it happened during, well, about 2018 or so, that they came up with a proposal that was passed unanimously between the Republicans and the Democrats in Congress that they would expand the FinCEN reporting to the entire country and to all real estate transactions dealing with cash buyers. And so these requirements, which became effective originally December 1st of 2025, is that affected all settlement agents across the country. That mean escrow companies in California, whether they be under the Department of Insurance, Department of Financial Protection and Innovation, the Department of Financial Institutions, Department of Real Estate, attorneys to places across the country, Arizona, where they have title agencies, to east of the Rockies, where they have mostly attorneys. All settlement agents dealing with real estate transactions would have to now be reporting to FinCEN the reporting of sales of real estate where the buyer was using cash, all cash, for the transaction. Why they weren't dealing with transactions that had loans involved is because the lenders are already being vetted at the national level of who they were dealing with. So it's all cash buyers, and it had to do with obviously cash, but also if it was a seller carryback transaction or a hard money loan, those were deemed to be all cash as well, just because the lenders of those funds were not being vetted at the federal level. Now, the other thing that they did to try and limit the activity was that if the buyer was either an entity, such as a corporation or a partnership, a limited liability company, or a trust, even something as basic as a family revocable trust for estate planning purposes, those type of buyers were going to be coming under the scrutiny of this FinCEN reporting requirement. And then what made it even a little more difficult is that if the trust had beneficiaries, not only did the grantors or the settlors or the people who set up the trust have to be vetted, but also the beneficiaries had to be vetted. And that made it a little bit cumbersome depending how many layers of beneficiaries there were. So this ruling obviously wasn't going over very popularly with the settlement agents across the country. However, it was something like we talked about is unanimously decided by both parties, Republicans and Democrats alike, to go forward with this reporting. Now, it got to be so difficult that the December 1st of 2025 effective date was pushed to March 1st of 2026. And so all real estate transactions that were closing after March 1st of 2026, dealing with all cash buyers of real estate, had to be reported to FinCEN. And the reporting was that there'd be a portal that was set up at the FinCEN website that people would be uploading the data on the buyers, their name, address, their tax identification numbers, and this information needed to be verified by the settlement agent, meaning a copy of a passport, copy of a driver's license, and then that'd be uploaded at the website. Now, all reporting that any transaction after March 1st of 2026, you had till April 30th to report, meaning whatever transaction closed, it'd be the last day of the following month where the transaction had to be uploaded to FinCEN, giving the details on the information. And then I also had to give the information on the sellers as well. So this brought a lot of uneasiness to the buyers and sellers of transactions. That all of a sudden, sellers didn't want to sell to somebody who's going to be an all cash buyer if it meant that there would be information to be reported on the seller and so on. So it got to be a little bit difficult. Then you had people trying to sidestep the rule where people would buy in their individual name, and then after escrow closed, then they would transfer the title into their entity to try and avoid the reporting. It brought a lot of concern from that regard. And then Fidelity National Title filed a lawsuit against the United States government in Florida to try and get a stop on this, but the judge in Florida um, did not rule in favor of Fidelity, and so the reporting went forward. Well, it was just a couple of weeks ago, though, that a U.S. District Court in Eastern Texas ruled that the FinCEN requirements shall be vacated pending further review of the rule. What does that mean is that the requirement to file with FinCEN has been delayed. It's been deferred. It's been postponed, and in the eyes of the court, it's been shut down. Well, one court's ruling doesn't mean that's what it's going to be forever, and we anticipate that the federal government, through the Department of Justice, will file an appeal to this district court's decision to try and unvacate the vacating of the FinCEN reporting rules. And it's something so it's now at the point of wait and see. Now, what it does mean you don't have to do any more reporting. You don't have to upload anything to FinCEN until this all gets worked out. Now, what we also think you need to do is you should check with your own attorneys for your companies that deal with your escrow side of things, just to make sure of what the impact is on your company and of the processes that you had been setting up. It may be that people are going to say still gather all the information for the time being through your escrow. I mean, the buyer's information, the seller's information, um, and if the transaction does need to be reported, to find out if later the district court decision is overturned at appeals, does that mean you have to start all over again and start the reporting? Well, it's going to be tough to do if you haven't already gathered information. It may very well be that if the Court of Appeals overturns the decision, it may be that it'll just be a new effective date for the FinCEN reporting, meaning it won't be anything closing March 1st of 2026 and later, but it may be that it's just going to be the new effective date will be from when the appeals court order takes effect. So we don't know right now. It's something that uh, we're telling people, no, you don't have to do any reporting, but be on the lookout for an update because from what we've seen before with a couple of years ago, then there was this business ownership information reporting that had to be done. Again, the U.S. District Court in Eastern Texas vacated the rule, then appeals overturned, then another federal court affirmed again, then appeals overturned, and finally the administration in Washington came up with a compromise on how it needed to be handled. So we'll see what goes on with the courts. It's something that coming up in the next month, 2 months, however long it takes for an appeals court to act. We'll see what happens. Stay tuned for another upcoming episode of Debits and Credits here with Haas and Dawe, and we'll give you an update to the update of this FinCEN reporting. Thank you.